So, you just drove off the lot in a brand new car. Massive congratulations. That intoxicating scent of fresh upholstery, the flawless gleam reflecting off the hood, the exhilarating sense of freedom as you grip the wheel, it truly is a milestone moment. Revel in that pride. You've earned it. But amidst the excitement and admiration for your sparkling new investment, there's one critical question demanding your immediate attention. Is basic liability insurance genuinely sufficient to safeguard your new vehicle? For countless drivers, insurance feels like little more than a bureaucratic checkbox, a mere legal hurdle to clear before hitting the road. You grab the minimum required, file the paperwork, and consider it done. But what if that bare-bones policy doesn't actually protect you or your asset the way you assume? What if, by opting for the cheapest route, you're unknowingly exposing yourself to a devastating financial catastrophe? The potential consequences are far more severe than many realize. Let's meticulously unpack this vital topic. In this comprehensive video, we'll delve deep into the specifics, what liability insurance truly covers, and crucially, what it glaringly omits. We'll explore the painful regrets experienced by new car owners who discovered their coverage gaps only after an accident. Furthermore, we'll examine the essential additional coverages you absolutely should consider: collision, comprehensive, uninsured motorist protection, and more, detailing their costs, benefits, and the crucial question: is full coverage genuinely worth the investment for your unique circumstances? Whether you financed your dream car, signed a lease agreement, or paid cash outright, our goal is to equip you with the indispensable knowledge needed to shield your significant investment and navigate the road ahead with confidence and smart financial protection. Starting with the absolute basics. What exactly is liability insurance? Liability insurance represents the most fundamental and widely held type of auto coverage. Mandated by law in nearly every state and country, its sole purpose is to address the damages or injuries you cause to other parties in an accident where you are at fault. Picture this scenario. You accidentally run a red light and collide with another vehicle. Your liability insurance steps in to pay for repairing their damaged car and covers their associated medical bills if injuries occur. On the surface, this seems equitable and responsibly make an error, and your policy ensures the innocent party isn't financially burdened by your mistake. However, here lies the monumental catch. Liability insurance offers zero protection for you or your property. It categorically does not pay for repairs to your own vehicle, regardless of the accident's severity. It provides no assistance whatsoever for your personal hospital expenses if you're injured. It will absolutely not replace your car if it's declared a total loss after a crash. In starkly simple terms, liability insurance protects other people from you. It does nothing to protect you from the myriad risks on the road. This inherent limitation translates into an enormous, often underestimated, financial risk, a risk that becomes exponentially more dangerous when you've just invested a substantial sum in a brand new vehicle. Visualize this potentially devastating scenario. You've just experienced the thrill of driving your pristine new car off the dealership lot. It's immaculate, radiating that showroom shine, a source of immense pride. But merely weeks later, navigating a rain-slicked road, you momentarily lose control. Your vehicle veers off, colliding forcefully with a sturdy tree. Crucially, no other vehicles are involved. There's no third party to hold responsible. The impact inflicts severe damage. Repairs could easily soar into the thousands of dollars, or worse, the car might be declared a total loss. Now, recall your insurance choice: a liability-only policy. In this solitary accident, where you are solely at fault and only your property is damaged, your insurance provider will pay precisely nothing. You are left entirely responsible for the colossal repair bill or the staggering cost of replacing your new car. And if you financed the purchase, the nightmare intensifies. You remain obligated to make monthly loan payments to the bank for a vehicle that no longer exists, a crushing double financial blow. This reality exposes why minimum coverage can be dangerously misleading. When shopping for insurance, the lowest priced option presented is invariably liability-only. Understandably, many budget-conscious consumers select this, believing they're making a prudent, cost-effective choice. But focusing solely on the immediate premium savings is a profound miscalculation. It's a gamble with potentially ruinous stakes. Consider the broader spectrum of risks. If your new car is stolen from your driveway, vandalized in a parking lot, crushed by a falling tree branch during a storm, or struck by a driver who flees the scene, a hit and run, or carries no insurance, your liability policy remains utterly inert. In every single one of these distressing situations, you are left completely isolated, bearing the entire financial burden alone. The savings evaporate instantly when faced with a major loss. Beyond liability, essential shields for your new investment. Let's thoroughly examine the crucial supplemental coverages available and why they are often non-negotiable for new car owners. Collision coverage. This is your financial safeguard for damage to your own car resulting from an impact with another vehicle or object like a guardrail, pole, or curb. Even if the accident was entirely your fault, whether you misjudge a turn and hit a lamppost, back into another car in a tight spot, or are involved in a multi-vehicle pileup, collision coverage ensures your repair bills are covered minus your chosen deductible. Comprehensive coverage, often called other than collision, this vital protection handles damage to your vehicle arising from virtually anything other than a collision. Think theft, fire, flooding, hail damage, falling objects like that tree branch, vandalism, or even an unexpected encounter with wildlife like a deer darting onto the road. Combining collision and comprehensive coverage forms the bedrock of what's commonly termed full coverage. Though precise definitions can vary slightly between insurers, uninsured, underinsured motorist, UMUIM coverage. Shockingly, a significant percentage of drivers operate either without any insurance, or with limits woefully inadequate to cover serious damages. If you're hit by such a driver, MUIM coverage becomes your lifeline. It compensates you for vehicle repairs and medical expenses that the at-fault driver cannot pay. This is critical protection against others' irresponsibility. Personal injury, protection PIP, or medical payments coverage, regardless of who caused the accident. PIP mandatory in some states or MedPay helps cover your medical expenses and sometimes lost wages or essential services resulting from crash injuries. This is crucial for your personal well-being and financial recovery. Guaranteed asset protection gap insurance. This is frequently essential if you financed or leased your new car. New vehicles depreciate rapidly the moment they leave the lot. If your car is totaled or stolen early in the loan, lease term, standard insurance, even comprehensive collision only pays the vehicle's current actual cash value, which is often substantially less than the outstanding loan or lease balance. GAP insurance covers that potentially large difference gap, preventing you from owing thousands on a car you no longer possess. Addressing the cost concern head-on. I anticipate your immediate thought, this all sounds incredibly important, but won't full coverage skyrocket my insurance bill, especially right after such a major purchase? It's an absolutely valid and common concern. Yes, adding these robust layers of protection will increase your premium compared to liability only. However, it's imperative to reframe this cost. View it as a strategic investment in profound financial security. Weighing an extra $30, $50, or even $100 per month against the potential of facing a sudden, unplanned $20,000, $30,000, or $40,000 expense to replace your car and cover medical bills reveals the stark reality that modest monthly premium isn't just an insurance cost, it's the purchase of invaluable peace of mind. Furthermore, numerous strategies exist to manage these costs effectively. Bundling your auto policy with homeowners or renters insurance, opting for a higher deductible if you have savings to cover it, maintaining a clean driving record, inquiring about all available discounts, good student, safe driver, anti-theft devices, etc., and regularly comparing quotes from multiple insurers can significantly reduce your overall rates. Real-world consequences. Lessons from Jake and Maya. Let's solidify this discussion with tangible examples. Jake's costly lesson. As a first-time buyer, eager to minimize expenses, Jake opted strictly for the state-mandated liability insurance on his new sedan. Merely 4 months later, an uninsured driver ran a stop sign and T-boned him, totaling his car. Devastatingly, Jake's liability policy offered no recourse for his own loss. Facing a massive repair bill exceeding the car's value and lacking the funds to replace it, he was forced to sell the wreckage at a steep loss and start over financially. His initial savings vanished in an instant, replaced by significant debt and hardship. Maya's prudent protection. Maya, also a first-time buyer, purchasing a similar new car, heeded the advice to get comprehensive and collision coverage along with a sensible deductible. 6 months into ownership, a powerful overnight storm caused a large tree limb to crash onto her parked vehicle, crushing the roof and rendering it unusable. Maya's comprehensive coverage swiftly processed the claim, paying out nearly $10,000. The car's depreciated Value minus her $500 deductible. While losing her new car was upsetting, the financial impact was manageable, allowing her to recover and replace her vehicle without financial ruin. Two identical purchases, two profoundly different outcomes, dictated solely by their insurance decisions. Is liability ever truly enough? Rare exceptions. Admittedly, there are niche situations where liability-only coverage might be a calculated, albeit still risky, choice. Owning an old, low-value vehicle. If you drive a beater worth only a few $1,000s, and you possess ample savings to easily replace it out of pocket tomorrow, paying for comprehensive collision might not be cost-effective. Extremely limited use. If the car is rarely driven, for example, a classic car stored most of the year, or a pure backup vehicle, used only in emergencies and kept in a very secure, low-risk environment, the likelihood of a covered loss diminishes. Significant financial reserves. If you have substantial liquid assets and the potential loss of the vehicle, while unpleasant, would not constitute a financial hardship. However, for the vast majority of new car owners, especially those financing, leasing, using the vehicle daily, commuting in traffic, living in areas prone to weather events or theft, or lacking significant emergency savings, relying solely on liability insurance is an extraordinarily dangerous gamble with potentially catastrophic consequences. The financial vulnerability is simply too great. Your action plan as a new car owner. Honestly assess your personal risk profile. Scrutinize your driving habits, miles driven, routes, conditions. Evaluate your financial resilience. Could you absorb a $15,000 plus loss? And acknowledge the substantial value of your new asset. Review financing lease requirements immediately. Lenders and leasing companies almost universally mandate comprehensive and collision coverage, often with specific deductible limits for the duration of the loan lease. Failing to maintain this can breach your contract and lead to forced-placed expensive insurance. Shop smart, not just cheap. Obtain detailed quotes from multiple reputable insurers. Don't just compare bottom-line premiums. Meticulously examine the coverage limits, deductibles, and specific exclusions of each policy. Understand exactly what you are and aren't buying. Optimize your deductible. If cash flow is tight, consider a higher deductible, for example, $1,000 instead of $500 to lower your monthly premium. Crucially, ensure you have that deductible amount readily available in savings if needed. Never sacrifice essential coverage for a marginally lower payment. Commit to annual reviews. Your life circumstances, vehicle value, and insurance needs evolve. Schedule a yearly insurance checkup to reassess your coverage levels, ensure you're getting applicable discounts, and confirm your policy still aligns with your risk and assets. The critical answer. So, circling back to our pivotal opening question, is liability insurance enough for a new car owner? With near certainty, based on the substantial financial investment, rapid depreciation, lender requirements, and the multitude of unpredictable risks, the resounding answer is no. While it satisfies the legal minimum, it falls woefully short of representing the smart minimum for protecting yourself and your investment. Your new car is more than just transportation. It's a major financial commitment. It deserves, and you deserve, robust protection. Don't allow yourself to learn the harsh, expensive lesson of being underinsured through devastating personal experience. Invest the time now to fully understand your options. Consult with a trusted, independent insurance agent or advisor. Arm yourself with knowledge and make a truly informed, proactive decision about safeguarding your future on the road. If this deep dive has reshaped your perspective on car insurance, revealing it not just as a legal formality but as fundamental financial armor, please show your support. Give this video a thumbs up, subscribe for more essential insights, and crucially, share it with any friend or family member currently navigating the new car buying process. Taking these steps today could prevent immense heartache and financial strain tomorrow. Stay informed, stay comprehensively protected, and above all, stay safe on every journey.